Hello and welcome to KYC. I am Sharad Dubey and you are watching one of the most loved KYCs in this media industry. But let's talk about the stock. I'm going to give you a lot of hints about this stock and it's going to be very easy for you to guess. Why? Because it's a logistics company based out of South India. That's a first hint I'm giving you. The second hint is it's from TVS Group. It becomes very easy to guess, but I'll still give you the third and the most important hint. In the last 5 trading sessions, the stock is up 25%. Of course, a very strong quarterly earnings coming in. But what is the street actually factoring in? Let's guess the company, which should be in focus. And the company is TVS Supply Chain Solutions. Yes, I'm talking about the logistics arm of TVS Group, and it's a separately listed. And this is the company which we'll be talking about. And a lot of interest has come in. A lot of you have written to me on dissecting the company and the growth outlook going ahead. But why are we calling the company? That's the key reason for it. The Q3 numbers are very strong. Will that sustain in Q4? Is there, if a CV upcycle picks up, of course the logistics are also benefited. So it becomes very easy to understand and correlate different industries also. Also the view on an international business as the global tensions, these are also coming out. So will that pick up or not? And if that picks up, will their pricing power increase? Also the margin guidance for the next 12 to 18 months, they were under that pricing pressure in certain segments. Some kind of a turnaround did happen in the Q3 numbers. So will that sustain going ahead? That will be very much important for the markets because return ratios are very much important. There was a recent acquisition by Swamy and Sons 3PL acquisition. How was the acquisition? What's the timeline for the completion? And the incremental benefit which will come in the company's books, that is what the street is looking out for. The rising Indian freight volumes, that segment has done well, but the concern still remains is the pricing pressure. Has that changed or will that be under pressure for the fourth quarter? That's what we will be asking the management, and the management will joining us will be Ravi Viswanathan. He's the MD of TVS Supply Chain Solutions, and we'll be quizzing and even drilling Ravi as well. But apart from this, let's just explain you the entire setup of how this company is there. Remember, this company came in 2023 in the listing space. Before that, it was, of course, not very much active. So there is a limited data when we compare that with any kind of an analysis for the company. It provides logistics and supply chain management services. And there are two segments, of course. One is the global freight and the other one is the integrated system, and they are having international organizations, government and SMEs and large players as well. Also tech-led, asset-light business model. Tech-led and asset-light, of course the AI figure also comes in. Maybe if they start using AI, operational leverage comes, but that's a very far story. Coming back, they operate in 26 countries and the headquarters is, of course, in India. Apart from this, interesting point about this company is that they have 91 customers from the Fortune 500 list. That means the customer quality, a strong parentage is aiding well for the stock. But actually, is it? That's the question mark also coming in because a lot of investors have not got positive returns in this stock. I'll tell you why. The integrated supply chain solutions, that's the first one. And the second one is, of course, the entire supply chain for the clients which they are managing in these services. And this is giving a lot of operational efficiency. And this backward integration is what we call is very much important in logistics. They also source raw material to the delivery of finished products. And that's the end-to-end solutions is something which I talk about. This is the services. And generally, the services are a bit on the higher margin side. Network solutions are also there to focus on them. Apart from this, let's look at the other key details about this company and the global shipping and last mile delivery. That's also there. I have been mentioning you that the global trade is easing out. That is where the strength lies. Let's move ahead faster to understand how things are panning out, and the different logistics are there which I'd be focusing on. The 3PL is there. There is cold chain and the businesses, how they are panning out. 73% of the business is in the international segment. 27% is from the Indian. So of course, global macros are very much important for this counter as well. So, and this geography is something which is most important, and also there are different industries also which we talk about, the GFS as well as the IFC. But this is the entire picture. for the company. But let me explain you the rating parameter of why it's so much important to get them in KYC. And of course, we talk about the numbers. There's going to be income statement, there's going to be balance sheet, there's going to be cash flow, the basic three which we have to follow. Then comes the return ratios, what has happened, the ROE numbers, the ROC numbers. That's something which you'll be watching out for. Shareholding is how the institutional play has changed around. Remember, the history is still limited. Street cred, what the returns have come in after the IPO, maybe in a year basis, even a short-term basis. So for everyone, be it a trader, for an investor, we track the returns and we'll give it to you in KYC. Valuations, we get in their peers and compare which one is expensive, which one is not. And last but not the least is the outlook, be it the industry outlook or the company outlook, because this is one of the most important and the forward-looking parameters which we judge in KYC. The first one is, of course, the parameter I'm talking about is income statement. Now look at it with two views. First is, of course, the Q3 numbers, and second is the 3-year CAGR. And my concern remains is the revenue and the overall margin growth has not come yet, and that is why after its IPO, the stock has been on a downhill, and that's a big concern coming in. And there was, of course, some sell-off also coming in amongst the shares, but that's a demand-supply story. But coming back to the numbers is definitely concerning. It's a single-digit growth coming in the 3-year CAGR numbers. But is the turnaround there? The Q3 numbers is something I would like to watch out for. Revenue decent, 11% growth coming in. But the street has started liking the bottom line numbers. EBITDA saw a significant jump. EBITDA up 32%. That is where the strength of the conviction is lying. And the margins, 116 basis points up move to almost 7.3%, and that's a decent margin profile for a company working in this industry. And of course, PAT was flat, you could say, but a turnaround was there. It was a roughly at 11 crore rupees. It was not flat. The turnaround came in. This was a loss, then it went to the profit. So this turnaround is something which the street is very, very much bullish on. So it's a neutral rating when it comes to the income statement. Let's talk about the balance sheet, what has happened here. And the balance sheet, largely we have a look. The book value has gone up, but the borrowings in FY23 it was roughly 1990 crore rupees, and that has actually halved to 860 crore odd rupees. And looking at the cash balances, that's still decent, 612 odd crore rupees. Remember, the company has announced a big acquisition also on the funding. Might be through debt or accruals, and we will definitely ask the management as well. But income statement, it was neutral. Balance sheet, it was neutral. But I'll explain you the cash flow segment, what's actually happening in this counter. Cash flow from operations, there was a lumpiness, and that's what we can see. It's coming back from FY24, 672 odd crore rupees. Of course, there was one-time adjustments and aberrations, and that's why you're seeing a very different form of numbers for FY24. But coming back, there is a normalization which is starting to come in, and the 9-month numbers are also suggesting that. So let's give it a little bit more time, and the cash flows, if they improve on this, especially on the new businesses, that is what the street will be cheering for. But as of now, I'll give a neutral rating when it comes to the cash flow. Let's talk about the return ratio. And when we speak about and there are no returns coming in after the IPO, concerns are definitely there because some balance sheet hits also come in. So of course, by definition, the ROE numbers are going to be bad. So ROE is negative. That's a concern for the company as well. And the ROC, that is also, you could say it's less than 5% as per the calculations. So it's not convincing. You need at least 10, 12 or 12 to 15% band of ROE ratios for a business model like this. So the company has not achieved its full peak potential yet. So is there an opportunity here? Is that bottoming out? That's a question to be asked. But return ratios is still, I would give a neutral rating. I mean to say not a neutral rating, a negative rating. It's a red, big thumbs down coming in. Let's talk about the shareholding pattern, how things are changing, how things are moving, and the concerns are there. The FIs got their stake in 4%, but then they reduced it to 3%. And a big concern for me, when the company was newly listed, the DIs had 6%, and then the dumping started. It became half, almost 3%, and it's now at 2%. So both sides, FIs and DIs, we are seeing institutional sell-off happening. That's not generally a good trigger for a company. But the public absorption has been strong, roughly 52 odd percent, and promoters showing the strength still at 43%. And remember, the promoters are from TVS Group, and that always commands a premium in the market. And it's a matter of time, maybe this stock also might get that premium for the TVS parentage group, plus industry tailwinds and companies improvement in the profit. And everything is a slave of profit in the markets. At the end of the day, we all chase EPS growth, and that is where we see the market has started rewarding this stock. And the last 5 trading sessions, stock was up 25%, and now year-to-date basis, if I manage that, that's 16%. So short term and even the minor medium term, the momentum has become very strong for this stock. But 1 year, it's down 8%, and the biggest concern which I had mentioned you is that from the IPO price, it's, you could say it's up only just almost, it's down actually 34 odd percent. So there is a lot of queries are there. There was a time when the stock was between 180 to 200 odd levels. Still the stock is recovering, but there is still a long way to go. A neutral rating coming here, and valuations. Remember, if the stock falls, the valuations at times become attractive as well. CV cycle is up moving, and now the valuations of the peers, I have got these valuations in over here. Blue Dart and Mahindra Logistics, it's at an expensive one, 38 to 41 times. Deliveries on the higher side, coming in at 59 times. But if you come back, TVS Supply, it is the cheapest one. That is where my eye has been there, and it's just 31 times its 12-month forward P. That means the valuations are still very juicy right now. So on this basis and comparing them with their peers, I would give a very strong thumbs up when it comes to the valuations. So valuations are over. Let's talk about the outlook. Outlook is very much important. We spoke about the industry, how the upcycle is moving in CV. So logistics is picking up. Positional bets are coming up. That's what our analysts have also stated. And there in new business models, the integrated supply chain business outlook, that is strong, especially for the Indian and the European markets. North America, yes, there are some bits and pieces which need to be figured out. The PBT margin medium-term target is set at 4%, and that's what the management has stated in their Q3 release. And the global trade sentiment, if that improves, their international business also goes up. So there are 3-4 important cylinders which are firing. If they fire all together at the same time, that is where we see that the stock might get re-rated, and margins also saw a turnaround in Q3. Will that sustain going ahead? That will be very much important. And when things from very bad move to bad, that is where the alpha is made, and that is why this stock has I've picked up in KYC. There might be a bigger chance of alpha in this counter. Let's give you an entire picture of the KYC ratings, what has happened. There are concerns in the company, but there is a lot of silver lining also, which I had mentioned in our conversation in KYC. Income statement, balance sheet, cash flow, the numbers, the past is neutral. Return ratios still, not convincing enough for the investors who are already invested in this company. Shareholding, the institutions are also selling off. Of course, the retail participation is growing, so that's a little bit of concern coming in. Street cred, short term good, long term not good at all. But the valuations make that cheap, and the outlook, that is where the market is favoring this company right now. So that is something I would be looking out for. The final rating, it's even Stevens for this company, TVS Supply Chain Solutions. It's 4 out of 8. That's what we have given this company. Now, of course, joining us will be Ravi Viswanathan. He's the MD of TVS Supply Chain Solutions, but I'll give you some interesting facts about him. He was the one who undertook this company and made it public in 2023 under his leadership. And an interesting thing in his resume is that he has worked in Tata Group for over 33 years. That's a big experience. And also he's a part of the Executive Council of NASSCOM since 2015. And joining us is Ravi Viswanathan, and he's lean and mean. Ravi, very nice to have you here. And the numbers are very strong, a turnaround after a long time, tested investors' patience also. Explain us Q3 numbers, how they were.
Good morning, and very good to be on your show. Firstly, I think we had a fantastic Q3. If you look at it, it's coming on the back of a very strong all-round performance in India, We grew by almost 11% year on year, sequentially by 5.5%. So India came out very strong for us in this quarter. And it is something which I've been speaking about for the last couple of quarters, that we have seen this pipeline coming through, and we expect the linear growth to continue. And we expect this linearity of growth to continue over the next 2 quarters for India, which means we look at a sequential growth of about 4 to 5% over the next 2 quarters, which is in a way reflective of the economic activity in the country. What is also encouraging is that the rest of the world business came up very strong on a year-on-year basis. That also grew by about 11%. So overall, I would say it's a fantastic quarter. A lot of good new wins. 319 crores of our revenue for Q3 came out of new wins, and that represents about 13% of our quarterly numbers. So I would say overall a very strong set of numbers on the revenue growth. On the margin front, it has been fantastic. Our EBITDA grew to 199 crores, a growth of about 32.5% year on year. And that is reflective of a lot of initiatives that we've been talking about over the last 3 years, last 3 quarters, on how we are setting right a scheme of things which we call Project One in Europe, in the ability for us to right size and right shore our activities so as to get efficiency and productivity. And all that is reflected in the performance. And these are not one-off measures. These are measures which will sustain, because we have basically lowered the cost at which we can deliver very strong platform on which the profitability of the company will continue to grow. We also spoke about continuously looking at opportunities. We recently announced acquisition of a company called Swami and Sons 3PL in the space of FMCG. FMCG is a white space, and we have strategically made this acquisition so that we can participate in a very consumer-led economy, which is India. So I would say that we are looking at how we can address all of these white spaces. And lastly, I also say that we continuously keep looking at potential acquisitions. Today's news about the Rafael deal is exciting. We have a very strong capability in terms of supporting the Department of Defense in the UK, and the opportunity for us to now see how we can replicate many of these processes and other things that we can do to address a fast-growing defense segment in India. So India clearly is an area where we continue to keep focusing, keep investing.
Right.
And I just thought these are probably a quick set of highlights for Q3.
Exactly. The highlights have been wonderful when it comes to TVS Supply. But I want to get a little bit of more into the details because over a long period of time, the stock after its IPO, there has been a sell-off. A lot of investors and viewers had written to me, what is the overhang for this company? And that is what one of the reasons, because I saw the numbers, and that is where the turnaround has started. That's what we have gotten. But if you could just give us a little bit of numbers, the margins also, there has been a turnaround. So what kind of a blended consolidated margins we can expect, say, in the next 6 to 12 months when most of the business scenarios or the macros have kind of moderated? That's what you're estimating. So what can that range be for the margins blended basis?
Sure. So, there are two segments that we operate in. One is the integrated supply chain solutions segment, and then the other one is the global forwarding solutions. The global forwarding, like rightly you mentioned in your previous run to the Know Your Company, the global forwarding company solution has a lot of dependency on the global macro, and those are positive signs that we are seeing with a lot of the FTAs coming. So if you look at these two segments, the ISCS segment today is operating at about 9.3%. We think in a steady state it will be about 9.5 to 10% EBITDA. The global forwarding solutions business is where we need to move to about a 3 to 4 to 4.5% over the next 4 to 6 quarters. And we continue to remain focused on getting to a 4% PBT. That is the aspiration of the company. Every leader in the company would be talking about it, would be building plans as we get into FY27 towards converging to that 4% PBT by the end of this coming fiscal, that is FY27. So from a PBT perspective, we want to get to 4%. From EBITDA margins, the ISCS segment should get to about closer to 10%. And GF, the global forwarding solutions, I will just say I will still be cautiously optimistic. I have to see how all of these trade agreements pan out. But our steady state, we want to get to about 4 to 4.5%.
Right, 4%, 10%. These are the important targets you should be looking at. But we have started 2026. We are in the second month of it. Almost you could say 1.5 months are gone. The demand queries, the new year projects which start coming in from the clients, customers, especially the global ones, how the tone is, what's the demand trends looking like? Has the confidence picked up now after the clarity from the deals?
So again, the ISCS segment is a very steady growth business for us, and we have seen spectacular growth in the ISCS segment. Our order book has been fantastic. We've been able to convert quite a few large orders, and that's resulting in what you see in terms of both the revenue and margin expansion for the 9 months. India, I spoke to you specifically. We have been closing quite a few large deals with a large energy provider, with a large automobile provider, with multiple segments in the industrial segment side of the business, in the consumer side of the business, that's the durable side. So it's been an all-round growth for us in India. So our order book is a very strong order book. Our pipeline is probably at the strongest. We have about 6,300 crores in our pipeline. We typically tend to convert about 20-22% of our pipeline. Again, the pipeline conversion should be seen across two lenses. The global forwarding pipeline typically gets converted between 3 to 6 months. The ISCS typically has anywhere between 4 to 12 months as its gestation period, because these are slightly longer drawn projects. But having said that, we announced the opening of one of our largest facilities in the US, and that is today fully operational. We expect volumes to go up starting Q1 of FY27. So it all goes very well from a growth perspective in the US for us on the ISCS segment. When I look at FY27, we signed a very large deal with one of the largest retail chains in Europe, and that is building up capacity. We get into peak capacity by Q4, that this current quarter that we are in. So it all goes very well from a volume build-up for FY27.
Right, Ravi, the Indian freight volumes, they are also picking up, and that's decent. But there is a concern of the pricing pressure. Are we still going to get some kind of a pricing pressure in the fourth quarter, or any signs of bottoming out?
On the forwarding business, on the air and ocean freight, I would say the pricing has always been under pressure because the macro, the demand environment is not all that great. But thankfully, our businesses, the volumes have really surged. We have had close to 100% volume surge from India exports over the last 4 quarters. Although from a pricing perspective, the global freight and air freight businesses, both ocean and air, have dropped significantly, and that pressure will continue. But with the global trade agreements getting into play, which I think will probably start playing out mid Q1, we expect the rates to stabilize. And as we get into the second half of next fiscal year, I would think the rates would start showing signs to go up. So have we seen the bottoms on the freight business? I would think so. But I will probably wait for another quarter before we are going to say, hey, I can see now green shoots on the pricing side of the freight business. On the ISCS business, I would say the pricing
yes, it seems very basic on that. So 1 quarter, you need to wait it out before you say, hey, green shoots are here again when it comes to the pricing of the Indian business. But thank you very much, Ravi, for giving us an entire view, and congratulations on the turnaround which your company has done. And of course, investors are taking a sigh of relief as well, the ones who are the long-term investors. But thank you very much. It was very nice talking to you. So, of course, the management talking about, the positive momentum for the fourth quarter for TVS Supply Chain, but they were cautious when it comes to the pricing pressure for the India freight model. But the markets are rewarding the stock, and there is a bullishness coming in because the valuations are cheap. And now it seems like the company is ready for a turnaround. And overall, we have kept a balanced rating. We have given 4 out of 8 for TVS Supply Chain Solutions. And that's all, folks, for today. We have given you the entire picture of the stock and the sector where a lot of interest is coming. Stay tuned for these interesting KYCs which I get for you only on NDTV Profit.